Okay. Maybe we'll wait for just a minute or two more, let more people join in. I still see more people joining in. So we'll start off in a minute's time.
Sure. Should I pick it?
Yep. I think we can start off.
Hello, everyone. Very good morning to everyone present here. Thank you for joining us on today's webinar. Let me just start off with introducing Cashflow. With the integration of Logitech, Cashflow now provides enhanced offerings enabling automation, payment, and reconciliation, GST filing, supply chain finance, ERP integration, e-invoicing, GST ITC maximization, and these innovations empower enterprises to substantially. Also, let's begin with introducing Aditya. Aditya Kulkarni is the head of partnerships and compliance businesses at Cashflow. With a strong background in strategic partnerships and regulatory compliances, Aditya plays a crucial role in driving businesses' growth and fostering key alignment. His expertise in navigating the complexities of financial regulations ensure that Cashflow remains compliant while delivering innovative solutions to its clients. I would now like Aditya to take over.
Yeah, thank you so much, Saryu, for a quick introduction and a very warm welcome to all the participants here. And again, a very warm welcome to the speaker, Mr. Sunil Gravawala, sir. It's really a privilege to host you, sir, on this and one of the critical topics as well on IMS. We really look forward to hear you. I think less spoken from me, but I would really want to introduce you on a quick round of introductions. I'm sure most of us in the country know you since the journey of GST and even before that. But still, for the benefit of everyone, I really would like to give you a quick introduction. So, Sunil sir, am I audible, Shariu? I think there are a few hands which are raised saying that I'm not audible.
Yes,
Okay, fine.
I
Yes.
can hear you clearly.
All right, superb. Uh, so Sunil sir has been a chartered accountant and cost accountant by profession. 25 years of experience in his profession's journey, and he has been focusing on tax laws, VAT, service tax to begin with, and now GST. We all know that he has authored several books, some of the renowned treatises on service tax, and he has been an active contributor to even the GST policies that are predominantly driven by the country as such. A very sought after speaker. As I said, we are lucky to have him here. He have been delivering lectures across multiple industry forums, training to government officials, and writing extensively on the indirect tax. And I am also a very active follower of him on YouTube channel as well of his. So those who would like to continue to get what is happening around GST, am sure you should, also try and join his YouTube channel. Sunil sir was a former president of Bombay Chartered Accountants Society, and he's also chairing the Indirect Tax Committee now. The topic today that we are planning to sort of quickly address is on IMS, which is Invoice Management System, one of the end game that was sought after on the first entry point journey of GST when it started in 2017. I think they are here and they are here to stay as technology and as business. Over to you, Sunil sir, for an enriching session. We will look forward to hear from you, sir.
Thank you, Aditya. Am I audible?
Yes, sir. Yes, you are audible.
Yeah. Thank you, Aditya, for a very warm introduction and elaborate one too. And of course, it's my pleasure to be speaking on this new amendment which is being proposed in the GST portal processes relating to the invoice management system. And as you rightly brought about in your introductory comments itself, that this was originally the game plan at the time of introduction of GST. But for various reasons, in 2017, when we introduced GST, we could not somewhere bring in a concept like an invoice management system, which initially was planned to be a part of the GSTR-1, 2, 3 filing process itself. With a little bit of change, we are now trying to bring in, and I think it's in a way a big game changer. Over a period of what
Sunil sir,
we
we are
redid was
losing you in uh, we are losing you in between the audio. The audio is breaking.
Yeah, I think we lost Sunil sir. We'll wait for some time.
Sunil sir, you can just stop your video and then maybe try again. That should be.
I think we lost him. Maybe he'll join again.
Yeah, let's just wait for a couple of minutes.
Yeah, yeah. So while Sunil sir joins, I see a lot of participants here. There is a quick poll that, like a survey that we are also doing on IMS. We would like you all to participate in that survey. There are multiple ways in which IMS will span out for every business. We would like to also hear out from you. What are your thoughts around it?
So what I'll do is I'll put it in the chat box.
Yeah,
Everybody can take up the survey there.
and
Just
also on
give
the
me.
questions, meanwhile, if you have questions, please feel free to put it on the chat. Shari will take up all of these questions at the end of the session of Sunil sir. We can see Sunil sir here. Sunil sir, um, you are now visible, and even screen is visible. Yes. Just please unmute yourself, sir.
Sure. Yeah.
Yeah.
Am I audible now? I
Yeah.
think
Yeah.
network issue. So I think
No
I got
problem.
locked off for a moment. So I was just starting the preliminaries and talking about the background of how invoice management system is likely to be a big game changer. And after a period of 7 years, we are now seeing that both the GST and portal systems at the government as well as the taxpayer side perhaps are in a state of readiness to some extent to really look at such a sophisticated mechanism of ensuring a proper flow of taxes and credit. As a prelogue, we are aware that when GST was introduced, we are told it was one nation, one tax. And over the period of 7 years, we've known that it is anything other than one nation, one tax. And I think the primary reason for that is that there are just too many stakeholders. Specifically because of the dual GST structure, we have multiple states governments which are stakeholders to the entire process. And of course, there is a central government which is a stakeholder. And these concepts of B2B and B2C, we are very much aware. And as far as B2B transactions are concerned, we are aware that being a value added tax regime, we have a situation that the tax paid by the supplier would generally be eligible to the buyer or the recipient as a credit. This input tax credit eligibility to the buyer basically means that in the case of a B2B eligible transaction, while there is a cash flow in terms of a tax moving from the supplier's kitty to the government kitty, that amount which is moving from the supplier's kitty to the government kitty is really not an expenditure for the taxpayer. It becomes an asset for the buyer. And because it becomes an asset for the buyer, there is a corresponding liability of the government. It's technically not a revenue of any of the governments in that sense. As compared to that, there are certain blocked credits and certain situations where input credit is not available. And we have looked in accounting and we are all aware of the fact that if input credit is not available, it becomes a cost to the taxpayers. And that cost to the taxpayers reflects itself as a revenue for the government. And this revenue to the government typically gets shared between the center and the states because of the dual GST structure. The 18% GST which is paid, 9% belongs to the center, 9% belongs to the state. We are also aware that the design of GST is a destination-based consumption tax, and therefore the state component should ideally flow to the destination state, the state where the consumption of the service happens, in the service or the product happens in case of B2B non-eligible transaction. As far as B2C transactions is concerned, I think from day one, it has to move to the respective the revenues to move to the respective governments. And therefore, since there is no eligibility of input tax credit at all in the case of B2C transactions, the amount typically gets shared between the center and the destination state. Now, you might notice that there's a small difference in the slide over here. In the second situation of B2B not eligible, we just mentioned sharing between the center and the state. Whereas in the case of B2C transactions, we are talking about sharing between the center and the destination base state, which is the correct principle. And why is that difference coming in? The difference comes in because in the case of a B2C transaction, we are aware that when we file the GSTR-1, we are required to supply information based on the place of supply. So because the B2C's GST is plotted, information is available relating to the destination state or the consumption state. And therefore, there are typically not many challenges as far as B2C transactions are concerned between the sharing of the center and the state. But when it comes to B2B not eligible, there is a bit of a challenge. The challenge comes because in the case of a B2B transaction, it is the recipient's GSTIN where the credit is declared as block credit or lapsed credit. In many cases, the consumption would be in the same GSTN or the same state. But there could be examples of pan-India consumption and procurement of that supply at one location. And a very common example where many states feel aggrieved is a situation of a Mediclaim credit. As you are aware, many insurance companies would provide Mediclaim services to a company for the group Mediclaim of the employees. This Mediclaim is not eligible as a credit. Now, and most of the organizations would have a consolidated single policy for Mediclaim for all the employees across the country. Necessarily, the insurance service gets consumed in different states where the employees and their families are located. But because of the provisions of the IGST law, which treats that in case of a B2B transaction, don't go into the specifics of the location of the end recipient, look at only the GSTN of the recipient of the immediate recipient. We find that in case of an insurance company located in Maharashtra, raising an invoice for Mediclaim to a Maharashtra entity, even though it might be for an pan-India employees, the tax charge will be C plus SGST Maharashtra. And if it is treated as a block credit by the Maharashtra GSTN, the tax entire Mediclaim GST component would go to the state and nothing to the state of Maharashtra, and nothing would go to various other states where the employees are situated and are day in and day out consuming the benefits of the insurance service. And I think this is where, over a period of time, the state government started realizing that the design of the GST law itself has certain flaws, resulting in some prejudice, some states earning more revenue, whereas some states earning less revenue, and an imbalance in those revenues. And that's where, over a period of time, the council and the portal and various things have happened to make small incremental changes to try to address these types of imbalances. And I think with the invoice management system, from the government's perspective, this is a major aspect. It's a step forward in the sense that there will be a lot more clarity, because each invoice level, there will be a tracking of what is happening to that invoice. In that context, when we talked about seamless input tax credit, and that was the promise at the time of introduction of GST, we are aware that there are various examples where credit is not eligible. And while we say that all expenses or any procurement of goods or services in the course or furtherance of business should be eligible for input tax credit, we are aware that Section 17(5) has a long laundry list of items where credits are not available. There is also an allegation at times that certain inputs are not used for the furtherance of business, especially when you are incurring expenses for an IPO, which typically might result to be related to an OFS or something like that. There might be some services which are used exclusively for exempted supplies. We are also aware that if you are a mixed supplier having taxable as well as exempted supplies, there is Rule 42, which requires apportionment. We are aware that certain sectors like real estate, restaurants, etc., the input tax credit is specifically denied through rate notifications. And we are aware that there is Section 16(4), which prescribes a timeline within which you have to claim input tax credit. If you don't claim input tax credit within that timeline, then it lapses and becomes ineligible. You will see that there is one more point which we are talking about: place of supply mismatch. And this is something which the portal has implemented. And the interpretation of the portal is that if, as a recipient of a supply, you are located in the state of Maharashtra, or the GSTN is pertaining to the state of Maharashtra, and the vendor has plotted a place of supply of some another state, resulting in a POS mismatch, then input credit is not eligible. Now, of course, this is something which the portal has somewhere implemented in terms of a process. But if you go back to the basics of the law, the GST Act and the rules, it is difficult to find such a type of a provision in any of those acts or the sections. And therefore, there is a subject, this by itself becomes a subject matter of a debate. We are aware that when we look at GSTR-2B today, this place of supply mismatch is shown as ineligible credit. And there can be situations where a taxpayer might say that, no, my interpretation says that this is still eligible as a credit. I am satisfying all the conditions, and the law does not anywhere require that the place of supply should be exactly matching. So this is something which is a little bit of a tricky area or debatable area and litigative area. But subject to that specific point about place of supply mismatch, we are aware that many of the other examples listed herein are not eligible for credit. Now, interestingly, when we say not eligible for credit, and in the earlier slide, we saw that situation that if B2B credit is not eligible, then in that case, the tax has to be divided between the center and the consuming state. Now, how would the government really know that the credit is not eligible to you? Because the transaction has been uploaded as a B2B transaction. The general thought process would be that a B2B transaction is eligible for credit, and therefore it's an asset and a liability. And this is where the governments were facing a lot of difficulty a couple of years back, when they went and saw that there are so many situations where the taxpayer does not specifically talk about block credits. More importantly, in most of the organizations, when GST was implemented, they followed the basic accounting principle that if credits are not eligible, then the expense is straight away written off, or the amount, the GST component is straight away added into the asset account. And therefore, when those entities generated a purchase register and claimed input credit, the ineligible input credit did not have a line of sight at all. And therefore, it was never reported as specifically as a blocked credit in the returns. So this was creating a problem because the government never knew whether it is a permanent reversal or with meaning it's a block credit and therefore we should share the money or we should keep it in a suspense. And therefore, a couple of years back, we had a circular. Through a circular, we are now mandated that all credits should be first claimed, and thereafter, if they are not eligible, we should show it as a permanent reversal. And if it is eligible, you should show it as a temporary reversal. Now, if it is eligible but not eligible immediately, then show it as a temporary reversal. Now, why is this concept of temporary reversal coming into place? That comes into place because there is a concept that input tax credit, though available, it would be available subject to various conditions. And we are aware of the fundamental conditions that the taxpayer should have possessed a tax invoice, he should receive the goods or services. Now, we very simply, it becomes difficult in a complex organization to track and monitor transaction level receipt of goods or services. And therefore, loosely, the second test is approximated to be accounting in books of accounts. So therefore, we typically always, as a part of the matching, we say that if the transaction is not appearing in the books of accounts, maybe the goods are in transit or the service invoice is still not approved by the relevant teams. In that case, the credits should ideally not be taken. They should be taken only at the time when the invoice is reflected in the books of accounts. We are aware of section 16(2)(a), which says that merely booking of the invoice, receipt of goods or services is not enough. We are now required to ensure that the vendor uploads the transaction in the GSTR-1 and it reflects in your GSTR-2B. So there has to be a matching with GSTR-2B. Thereafter, the vendor should have paid the tax in the due course by filing his GSTR-3B. At the end of the year, you have to do a recalc. If you have situations where vendors have not paid the tax, then by September return, we have to make sure that we reverse the credits which have already been taken. And finally, if you have claimed the credit, but you have still not paid the vendor within 180 days of the invoice date, then there is a provision of reversal with eligibility to reclaim the credit. So these are examples of temporary reversals. And then there was a circular which explained this permanent reversals, temporary reversals, all those things in a very detailed manner. So essentially, pre-invoice management system getting implemented, what is the current process, the ideal process? I am aware that there might be some organizations where this may not be fully implemented or suboptimally implemented, but the way the law expects you to implement it, both in terms of the section and also through the circulars which have been issued and the guidance is issued from time to time, the ideal process, the utopian process would be like as mentioned in this chart. And we'll quickly go through it and then see how the invoice management system comes into this entire place and how does it improve the entire process. So as we are aware today, a vendor raises a tax invoice and sends it to the taxpayer. Along with the raising of the invoice, which nowadays is always IRN compliant, because required to be IRN compliant, because if your turnover is above 5 crores, IRN provisions apply to you. The vendor will also upload the invoice in his GSTR-1 and disclose it there or by the 11th of the next month, and by 20th he will pay the taxes as plotted in the GSTR-1. That is the vendor's cycle as far as the invoicing is concerned. This invoice which reaches a taxpayer ultimately gets accounted in the books after approvals. In the meantime, the GSTR-1 of the vendor, the line item in the GSTR-1 of the vendor auto-populates in the GSTR-2A as well as 2B of the taxpayer. Now, at the end of the month, the taxpayer is expected to download the GSTR-2B, which we are aware is available on 14th, match the transactions in the GSTR-2B, which is the auto reflection of the vendor's filing, with the credits booked in his books of accounts and undertake a matching. We are aware of this process of matching. This matching process will result into broadly three or four situations: not available in 2B, not available in books, properly matched, or matched but with some mismatches. And wherever there are small mismatches, we are aware that we might want to rectify those mismatches and reiterate the entire process. Now, based on the matching principles, we then have to take a decision which is relating to permanent reversals, temporary reversals, and whenever you are temporary reversals, you might also have a reclaim of earlier temporary reversals. We are aware of this entire process. And when we do this entire process, we will find that when you are reclaiming of earlier temporary reversals, the government has a little bit of a concern that what if you reclaim more than what you had originally reversed? Therefore, we also have on the portal something known as a cumulative statement of reversal and reclaim, wherein the portal keeps a track of a cumulative count of whatever was reversed in the past and how much you are reclaiming, and it ensures that you cannot reclaim more than what was reversed in the past. The principle of mistrust continues because there have been a couple of cases where taxpayers misuse the overall process, and therefore last month we are also bringing in a cumulative statement of a reverse charge mechanism tax paid and ITC against RCM claim. So these are all portal related incremental changes which we have kept on bringing in from time to time, and all of us have somewhere been struggling to, because every second month there is some incremental change which comes in, and then based on that we have to keep on adapting our systems and our processes to make sure that we are compliant with this type of overall process. Now friends, while we are somewhere stabilizing to this overall process, what are the key challenges which come up in this process? And I think the biggest and the fundamental challenge which comes in this process is that the transaction level details are still not available with the GSTN system. You have a 2B which says that these are the transactions which vendors have uploaded. But ultimately, when you claim the credit, because of various timing reasons, eligibility issues, and various things, you will not, the 2B will not reflect the correct input tax credit which an entity is expected to claim or is claiming. And therefore, when you put a particular figure in 3B, that figure which is mentioned in 3B is at an aggregate level. Now, that aggregate level figure will never match with the GSTR-2B figure. And therefore, there is always a doubt at the end of the government that perhaps you are not correctly claiming a credit. So, for example, in a particular month, you have a 2B which shows 100 and you have claimed a credit of 50 only because 50 invoices are not booked in your system. Next month, your 2B shows 70, but you have claimed 120, which includes the current 70 as well as the previous month's 150. Now, in this situation, many a times in the past we have seen and we have experienced this, that the computer systems, the government systems automatically generate notices. They just in isolation compare the 2B data with the GSTR 3B data because they do not have a transaction level detail. They would just look at the aggregate comparison, and that aggregate comparison will never match, resulting in these notices. And recently also CBIC gave this information that more than 90% or 97%, if I'm not mistaken, of the notices being issued are currently relating to these types of data differences. And this unnecessarily becomes a pain in the neck. There are notices, and so most of the times when you respond at the pre-show cause level only, the notices get dropped. But in certain cases, because of want of time or a mindset issue, we find that there are situations where the notices get carried forward, and that sometimes it become confirmed demands. And if there are such erroneous and confirmed demands, then there will be a requirement of a pre-deposit also. So this is one major challenge which is clogging the entire mechanism. And I think the root cause is that the transaction level details are not available. The second legal and a corporate challenge which comes in is this problem that today, because of a circular, we are told that even if a transaction is not recorded in the books of accounts, you will claim the credit and immediately undertake a temporary reversal. Now, claiming of a credit without receipt of a tax invoice or without receiving the goods is not envisaged in the law. The section says you can claim, your first right to claim the credit itself arises when you receive an invoice and when you book the accounts, book the goods and services as received in your system. Now, because of the circular, organizations have to claim it and immediately reverse it. Yes, agreed, it's a plus and a minus game. But fundamentally, you are not allowed to enter into the system itself. Instead of that, you are doing a plus and a minus. You are forced to do it because of a circular. But then many managements feel that perhaps it's not the right way, because we are all aware that circulars are expected to be clarificatory and they are not binding on the taxpayer. And therefore, there's a lot of hesitation in many organizations to unnecessarily clog up the return and the process by claiming credits and reversing credits relating to transactions where there is no surety whether those transactions belong to me or not. Many a times it can be somebody else's transaction, or maybe the person who is in fact a stranger to you might randomly upload something into your account by error, and then maybe he might also at a subsequent point of time do a credit note or things like that. So therefore, this was a second challenge, because again, you are doing it on an aggregate level, and because of the state matching processes, state settlement processes, you are forced to claim and reverse the credit, which results into a lot of reconciliation issues. And finally, there is no process currently to verify reversal of credits on account of credit notes. We are aware that if a supplier issues a credit note, the recipient is required to reverse the input tax credit if he had claimed. But because there is no mechanism to identify whether you had claimed the credit or not, there is also no mechanism to identify whether you have reversed the credit or not. And because the reduction in output tax at supplier's end is based on confirmation of reduction of input credit at the recipient's end, the government says, I don't have a mechanism to verify it. Of course, the last GST Council meeting, we have a circular issued which says that a chartered accountant certificate or a self certificate will have to be obtained from the buyer to ensure that he has reversed the credit on account of credit notes. But again, that defeats the entire objective of introducing GST. The whole objective of introducing GST was to make it non-document driven. Now, if through a circular, because the portal does not have a mechanism, we bring in a concept that we will have to maintain a physical document by way of a certification, it adds to the transaction cost, it adds to the entire process and the documentation requirement, and adds to the complexity. So, friends, in the background of these challenges, I think, as especially I have always been advocating that maybe time is ripe to go back to the old mechanism of a transaction level matching and accept reject situation, which was envisaged in 2017. Lots of representations were going. The system also now is getting developed. Therefore, on an optional basis, we are now bringing the invoice management system in between. So the amended process, if you can see, it basically a lot of it is similar. What essentially happens is, instead of clogging the GSTR-2B, we are now told that all the invoices from GSTR-1 will go into an intermediary system known as invoice management system, rather than going into GSTR-2B. This invoice management system will be plotted on a real-time basis as and when the GSTR-1 is saved, the record is saved by the vendor, it will automatically flow into the invoice management system. Now, the taxpayer will have a choice of running the matching. Earlier, this matching was between the transactions in the books and the GSTR-2B. Now, the taxpayer has a choice of matching the transactions between the books and the system, which is the IMS system. And based on that matching, the taxpayer can take actions. He can accept the transaction, in which case the transaction will automatically go to GSTR-2B. So it's a filter in that sense. It filters the records. All the trash records you can keep pending or reject. You are not sure, you keep it pending. If you know that no, this is not a vendor, this is a stranger, you can straight away reject it. So at least it does not clog into your formal records of GSTR-2B and GSTR-3B. So that is the intermediary filter which the invoice management system brings in. And whatever matching you used to do with the GSTR-2B, you can do with the IMS system. We are also told that as of now, the invoice management system is optional. So you can totally ignore the concept of IMS process and continue the process as it is. Straight away go to GSTR-2B and download GSTR-2B and match GSTR-2B with the books, and then accordingly do the action out as may be required. But if you are downloading IMS or GSTR-2B and you are doing some actions in form of accept, reject, or pending, then it will be important for you to create the GSTR-2B if it was already created. And therefore, you can see that the GSTR-2B now becomes a reiterative process. You can generate multiple versions of GSTR-2B based on the matching which you are doing at the IMS and the actions and the change of the actions. The GSTR-2B will keep on changing accordingly. Of course, the day you file the GSTR-3B, that would be based on the latest GSTR-2B, and that would be the final lock. Thereafter, the GSTR-2B cannot be regenerated or it cannot be changed. So essentially, by bringing in a filter of accept, reject, and pending, what we are trying to do is we are reducing the clogging on account of temporary reversals and reclaim of earlier temporary reversals. Because if the transaction is not booked in your systems, you will keep it pending rather than take it to GSTR-2B and then claim and reverse. You don't need to do all that. And therefore, the temporary reversals and the reclaim of earlier temporary reversals, that situation can reduce drastically. And as time progresses, this will also give a trail to the government in terms of what are the transaction level eligibility, ineligibility, and the actions undertaken by the taxpayer. And therefore, maybe many times the computer generated notices will reduce and the extent of certification required will reduce. So I think that those are the two major advantages which we are planning to bring by the imposition of this filter known as invoice management system. So friends, let's quickly look at what this invoice management system tries to do and what it is all about. So as we are told, it will be implemented from 1st of October, meaning for records from September 2024, whatever GSTR-1s and IFFs are filed for the month of September 24 will be plotted into the IMS, this filter, intermediary filter. It will include all the variations of the documents, which is invoices, debit notes, credit notes, and amendments to earlier documents also. Please note that the entire IMS flow will be based on the vendor upload date. And therefore, you might have transactions flowing into your IMS which are pertaining to earlier periods. For example, if an invoice dated 31st March is uploaded by the vendor only in the month of September, in that case, that 31st March 24 invoice will also reflect in the IMS for doing the necessary accept, pending, or reject option. How are they implementing based on an optional basis? I think the answer to that is very simple. They are saying that if you don't do anything, we will assume you are accepting everything, and therefore this entire filter is as good as not being there. We are pushing everything from that intermediary filter straight away to GSTR-2B. And therefore it becomes as is, where is basis type of a situation, no change in the as is process in that situation. So while all types of documents like invoices, debit notes, credit notes, and amendments will flow into the IMS, we are specifically told that the whole objective of this IMS mechanism is to ensure a proper appropriate flow of input credits. And therefore, invoices which are plotted as RCM by the supplier will directly go to 2B. It will not flow in through the IMS mechanism. Same way, ISD invoices also, the law itself requires you to claim the credit in the same month and then distribute the credit in the same month. And therefore, ISD invoices will also not flow through the invoice management system. Again, ineligible ITC due to POS or conflict or timing restriction will not flow. Import invoices will also not flow through the IMS mechanism. So it's basically the forward charge mechanism invoices, which will, and the debit notes, credit notes, amendments relating to it, which will flow through the IMS mechanism. Having said that, these are the transactions which will go into IMS, what all will have to be done? So there is some action to be taken. If you don't take any action, as I highlighted a minute ago, it will be deemed that you are accepting the invoices and therefore everything will move to the GSTR-2B. Now, if you are taking an action, the question is what is the action which you will be taking? And as we can see, there are three actions. And of course, when you looked at the original GST law in 2017, there was one more option called modify. That modify option is no longer available, or add records also was an option that is not available. So while we are moving towards the mechanism of 2017, a major difference between 2017 and the current IMS mechanism is that 2017, it was a two-way process. The flow was from a vendor to a customer and back from customer to vendor. Here, it still continues to be a unilateral process. It is still continuing from a vendor to the customer. Customer cannot amend a record. A customer can only reject or keep a record pending. He cannot amend a record. He cannot add an additional record. All of that will have to be still done offline. And of course, there is one email mechanism on the GSTN portal through which you can communicate to the vendor. But except that, through the the tax portal, there is no mechanism to do this process. So the options available for the action to be taken are accept, reject, and pending. And we are told that when you take those actions on invoices or debit notes, if you accept the transaction, it moves to GSTR-2B. You will then either claim it as eligible credit, or if it is a block credit, you will treat it as a permanent reversal. If you reject the transaction, if you are sure that the vendor is not the correct vendor and it's a stranger transaction, you will reject it. It will go out of your IMS. It will not come in your 2B also. The vendor will be given an intimation that, look, the customer is not owning up this transaction. You can do whatever you want to do. So the vendor can either, it may be an error in an invoice number, or it can be an error in the GSTN number. He can amend it in the next GSTR-1, or he may just continue the way it is. And of course, once an invoice is raised, unless it is amended, the tax becomes due at the vendor's end. Will be no reduction of tax on account of rejection by the customer. The vendor will then have to actually go ahead and amend the invoice if he wants to claim a reduction in the tax. If the transaction is kept pending, then it will be carried forward to the next period. A cumulative count will be kept, and that cumulative count will continue till the 16/4 deadlines are there. That is as far as invoice and debit notes is concerned. Now, as far as credit notes is concerned, it's a little bit interesting. And this perhaps is something which all of us may need to be aware about. And this might involve a little bit of a tweaking of the current process, or some calculated thoughts which we might need to take on this facet. So as far as credit notes is concerned, if we are accepting the transaction, the credit note moves into the GSTR-2B, and it will automatically reduce your input tax credit, because the presumption here is that you had claimed the invoice on the original credit, claimed the credit on the original invoice, and therefore, when you accept the credit note, it will reduce your input tax credit, which was originally claimed maybe a few months earlier. And therefore, if you are not sure that you need to, you had claimed the credit earlier, and the credit note is done by error, maybe for various reasons, then you can reject the credit. If you reject the credit note, it will not reduce your input tax credit, but an intimation will be sent to the vendor, and it will increase his output tax liability. Because see, a credit note, the vendor reduces his output tax liability. Now, since you are rejecting the credit note, therefore the vendor cannot reduce his output tax liability. Therefore, the reduction which he had already done earlier reverses, and there is an automatic increase in his output tax liability. And because there is a tax impact of a credit note, an immediate tax impact of a credit note, the system does not allow you to keep a pending action on a credit note. You have to compulsorily either accept a credit note or reject a credit note. And of course, someone might ask that, okay, I initially decided to keep it pending. Then now I realize that I needed to accept or reject it. So can I do that? And the answer is yes. Till the time you file your GSTR-3B, both the IMS and GSTR-2B will be dynamic documents, and you can keep on taking corrective actions in the IMS and keep on regenerating GSTR-2B. And when you ultimately file your GSTR-3B, that is where the IMS will get flushed except for the pending records, and the GSTR-2B will get frozen. So I think that is how the action will have to be taken. And in the last slide, I may just want to touch upon a couple of important facets on the IMS. So while it's optional, and I'm aware that in many organizations today, there's a lot of activity going around. The timing is, in the middle of your tax filing seasons for the direct tax and the transfer pricing as well. Or many companies might be finalizing their audits at this point of time. And maybe even the GSTR-99C for the 23-24 preparations would be ongoing. So many organizations may have a bit of a skepticism to implement it. But I would still believe that though it's optional, it's preferable to implement it. And essentially, if you look at it, it's not a major change. It's only that the matching plug, which was originally being implemented between your books and the GSTR-2B, now gets implemented by way of two iterations. Firstly, between the books and the IMS, and thereafter between the books and the 2B. Now, naturally, this will have its own sets of initial teething troubles, but the advantages in the long term are fundamentally high. So, as an organization, we as a consultant, we are preferring that yes, as far as possible, please implement it, even though it's strictly optional as of now, and it's very clearly mentioned that you may not like to implement it if you don't want to. And as I was highlighting in the earlier slide, there will be some care or a policy which will have to be taken for credit notes. Now, in this situation, especially vendor credit notes, if the vendor raises a credit note and it is rejected by the customer, by you, then it will increase the GST liability of the supplier. And if it is accepted by the customer, it will reduce the ITC liability of the ITC eligibility of the customer. And because you are not able to keep it pending, it can sometimes result in double whammy. Let me explain this through an example. As a supplier, you have raised an invoice of 100 rupees on a GSTN-1. And after raising an invoice, you realize that the invoice should not have been raised on GSTN-1, but it should be on GSTN-2. Now, most of the organizations have ERPs where a cancellation of an invoice is not permitted. Also, nowadays IRN is generated and IRN cannot be cancelled beyond 24 hours. So, the only recourse available when you realize that instead of GSTN-1, GSTN-2, you have plotted GSTN-1, the only recourse is to issue a credit note for GSTN-1 and issue a fresh invoice for GSTN-2. So now as far as GSTN-2 is concerned, there's no problem. But when you look at GSTN-1, you have an invoice of 100 and a credit note of 100. Now, naturally, you would plot both of them into the GSTR-1 and it will flow into the GSTR-2B of GSTN-1. Now, let's walk into the records of GSTN-1. The GSTN-1 says, I don't know this Mr. XYZ who has done all this, because effectively the GSTN-1 was put by error. So when he compares the invoices, he keeps the invoice pending. Because the person, the tax team doing the matching doesn't know whether somebody in the system would have procured some goods or services or not. So he doesn't want to reject it. He will keep it pending. Now comes the credit note matching. And when he sees the credit note, he sees that, look, this vendor is not in my books. This credit note is not in my books. But he is not allowed to keep it pending. So he will reject it. Now understand this situation. When he rejects the credit note, but does not reject the invoice, but keeps it pending, from his side, it's the matter is over. He is not claimed an undue benefit. But from the supplier's side, the tax of invoice of 100 becomes payable. But the credit note, because it is rejected, the adjustment is not allowed. So therefore, there will be a double tax impact at the supplier's end in this type of a situation. Same situation can arise in case of a customer who might keep an invoice pending but accept a credit note. So therefore, one will have to be very careful about this type of self-canceling invoices and credit notes, which are typically done as to cancel erroneous invoices. So maybe a better way would be to perhaps remove them from the ecosystem before the GSTR-1 is filed. So maybe manually delete it from the GSTR-1 filing process so that it does not clog the system, including the IMS system. So I think that was an important facet from my side. I am very happy to share these discussions with you. And of course, I'm open for questions, if any. And thank you very much for attending this session on a Friday morning. I know it's the last day of the week and everybody would be rushing towards the weekend. And I appreciate the time which you all have spent on this Friday morning. Thank you. Over to you, Sharayu, back.
Yes, sir. We have a few questions. You can see in the Q&A section.
Sharayu, you're not audible. Maybe you want to come closer and then.
Am I audible now?
Slightly better.
So, Sunil sir, we have a few questions.
Sure. Would you read
The
it out?
Q&A
Or?
section.
Yeah.
Yeah, sure. Yeah, I'll read it out. So the first one is by Vaibhav Bansal.
Sure.
He's saying if the input is ineligible, do we accept it, then take it to GSTR-2B and then show it as ineligible in GSTR-3, or we simply reject?
It's a nice question, Vaibhav, and I think that's why I think it brings out the objective of accept reject vis-a-vis eligible ineligible. And the answer to this is that you will have to accept the transaction and then show it as ineligible in 3B. Take it to 2B and then show it as ineligible in 3B. For a simple reason that accept reject is vis-a-vis the acceptance or rejection of the transaction, not of the credit. So what you are, when you say accept, you are saying that yes, I own this transaction with the vendor. When you say reject, you are saying no, I don't own this transaction with the vendor. That is the limited objective of accept, reject, and pending. The eligibility, ineligibility of credit will have to come through your 3B. And if it does not come through 3B, then the state governments will have their own challenges once again. So this, I think that's how it addresses this question.
The next question is, I am liable for e-invoicing. The next one is by Chandani. She needs your advice whether we have, if there are multiple lines, whether we have to do it one by one or some Excel utility is available for large data.
Yeah, I think this is again a very important question. And what they have told is yes, there will be an Excel available for download, and you may make the actions in the Excel file. As of now, there is no, I don't think there is a mechanism to re-upload it in that bulk fashion, but I'm sure they will have to bring about. For the success of IMS, it will be important that just like we have, a process of JSON filing as well as an API and various ASPs, GSPs through API have integrated the process. Something similar will have to happen here. As of now, from the FAQ, it appears that they would be only giving it in Excel right now. And maybe in the next few days, the APIs and all will be in place. Once they are in place, the ASPs, GSPs, Logitech, of course, cash flow itself is a ASP, GSP, and they have their own return filing and matching softwares. I'm sure they would also be working on it, and maybe it will take a few days, but at some point of time, it will have to be seamless. I'm sure if it has to be manually picking up one item and doing accept, reject, or pending, it's not going to work. And I don't think that's the objective either at either of the stakeholder ends.
So the next question we have is by Sushil Goyal. He asks if we can we claim ITC if invoice is pertaining to 23-24, but invoice for the same was not received by us after following up with the vendor.
So we are aware of the timelines under section 16.4. So the credit for this would be available only up to the month of October. So the statutory deadline is 30th November, and a return filed before 30th November is the last return in which you can claim the credits. Beyond that, you will not be eligible to claim the credits.
The next one is by Sarvesh. After accepting ineligible invoices, yeah, after accepting ineligible invoices, later supplied issued the credit note. What should I do in this situation? If I accept, will it decrease my ITC?
Yes, it will reduce your ITC, and then you will have to do a reversal of that reduction, or maybe an amendment of the block credit which you have done earlier. Because as we are aware, the block credit also, it's a cumulative count, so you can keep on amending that, and you go back to the old GSTR-3B circular and accordingly amend it.
Who will be the owner of the decision on IMS, the business team or the compliance?
I would believe the IMS would be primarily implemented by of course, each organization can have a very different perspective, but primarily done by the compliance team jointly in consultation with the business team. I do not think it can be pushed onto the business operations team. I'm aware e-way bills in most of the places and e-invoicing is pushed to the business teams. But here, because there is an interplay of eligibility of credits, the timing of credits and accounting, there are multiple stakes involved. I would believe a compliance team would be, or a tax team would be more appropriate team to own this process.
Okay, the next one is, will this also mean acceptance of invoice in business parlance? And will this also have any standing in the court of law against future disputes?
Yes, it's a very important question. I would believe that an acceptance of an invoice on the portal the courts might at some point of time look at it as a acceptance of the transaction. And therefore, one will have to be cautious. And that's where the deemed acceptance, of course, something which is deemed accepted, you might say that I have not expressly accepted it, but it can create a problem. And I think that's an important dimension that somewhere a vendor might file a suit against you to recover the money. So that's, I think it's a very important facet which we should be careful about.
Next is by Dhanraj. Normally, small suppliers do not provide credit notes and portal original tax invoice reference is not available to verify ITC availed or not. Should we reject CN?
If you are not sure, I think you will have to reject, because if you accept it, it is going to reduce your input tax credit. And therefore, if you do not have a clarity whether the credit note is correct or not, I think the only option available to you as a customer will be to reject. I know it will have consequences at the vendor's end, and naturally the vendor will follow up with you, and maybe in the next month you will resolve the situation.
The next question we have is by Anand. If the CN issued at the last day of the month is not received and accounted by the recipient, since the recipient cannot keep the CN pending in MIS, should he either accept or reject? Is there any other way out?
Because the pending option is not available, he will have to either accept or reject. The challenge, especially in these types of a situation wherein the last day credit notes are issued and the credit notes are in transit, definitely it will create a difficulty, because as an organization, you want to, reverse the credit in the next month. But for doing that, you can't keep it pending. And I would believe, therefore, you will have to accept it, and if you know that the transaction is yours, I think you should accept it and prepone the reversal by 1 month rather than keep it pending for 1 month and reverse it in the next month. Because otherwise, if you do a reject, there's a problem at the vendor end also.
Okay. The next is, what if the vendor wrongly rejected the credit note that resulted in increase in liability to the vendor?
Yes, if the customer rejects a credit note, it will result in an increase in the liability of the vendor.
Okay. Next is, what should be the action in a scenario of partial rejection in the invoice amount, like weight difference, quality rejection of part quantity?
Okay, so as I was highlighting, the modify option is not available under the GST and under the IMS mechanism. So either you have to accept it in totality or reject it in totality. In this type of a situation, typically you would expect the vendor to issue a credit note. Maybe till the time that happens, keep this transaction pending, follow up with the vendor, ask him to issue a credit note for the delta, and thereafter accept both the invoice and the credit note. Till that time, keep the invoice pending.
Do we have any IMS policy that companies should adapt in the decision making?
Yes, I think each organization will have to, as we saw, especially in the context of credit notes, there have been a lot of issues which can come up at a ground level. And therefore, I think a clear policy plan should be made vis-a-vis the customers and also vis-a-vis the vendors, how we want to deal with it. And I think it may make sense 1 month or 2 months down the line, it is documented by way of some policy document.
Will the reconciliation efforts be increased or decreased due to this?
I think the iterations of reconciliation will increase, but in the long term, because there is a documentation of this entire process, it will reduce the reconciliations 2 years down the line when the department asks for data.
Okay. The next question is by Kamal Singh. Right now, we can amend the data in 2B after ECO with our books. Can we do this after IMS?
Right now, can you please repeat? I just missed that question.
Yeah. Right now, we can amend the data in 2B after ECO with our books. Can we do this after IMS?
No, as of today, 2B is a static document. You can't do anything in it. So I think the query itself is slightly tricky. Are you saying 3B or are you saying 2B?
So he's mentioning 2B, 2B after E.
Because 2B cannot be amended. So I perhaps assume the person around. Can you unmute him? Let's understand the question. Or maybe because 2B cannot be amended. So then this question is, it can be regenerated based on the accept reject pending action, but it cannot be amended in any manner.
Maybe we can take this up offline later,
Sure.
just in the interest of time, right?
Sure.
But we can go on to the next question, Sharayu, if there are any.
Yeah. We'll take one last one. It's by Tapas. What is the legal backing of this provision? Do we see any necessity to amend the law to make IMS compulsory?
Yes, if at all, it as of now it's optional, and because it's optional, there may not be a need for a legal backing. But the day they want to make this compulsory, there's entire process. There will need to be an amendment in the act, in the provisions, and maybe a consolidated amendment might be brought about in the next budget, because that's the next visible date which we might get. Until that time, maybe they will put this entire thing as optional, and once the amendments are seen through, they might make it mandatory, and they might give the trader a reasonable amount of time to keep it. And they would also want to learn along the way. I think that's the way the entire GST has grown over the period of 7 years.
Okay.
Are we done with questions, Sharayu?
Almost. There are just two people left. Should
Okay.
we take it up?
Your
Next
voice.
we have is by.
Yeah,
Is it better?
let's finish off the questions. It's okay. So we can do maybe two more right now, and then the rest we can pick up offline later.
Sure. So the next question we have is by Arun. In case the tax invoice is issued with IRN and subsequently cancelled through credit note within the same tax period, whether we can choose not to report both the transactions in GSTR-1.
Yes, so this is relating to the self-canceling invoice. So if the same amount is there in the invoice as well as the credit note, and perhaps the original invoice was raised by error, and the credit note is also in the same month, it may be prudent to delete both the records. I am sure there at some subsequent point of time there will be a query that there are these IRN records but not uploaded in GSTR1. At that time, we can explain to say that actually I wanted to cancel the invoice, but because IRN cancellation is only for 24 hours, we were forced to raise a credit note. And technically, it's a cancellation of an invoice, and therefore we did not report it as an invoice or a credit note, because the reporting of invoice as well as credit note bears with it a risk in terms of customer action. As I was highlighting, if you report both the invoice and the credit note, plus 100 minus 100, and if the customer keeps plus 100 pending and rejects minus 100, you will end up paying a tax of 100 rupees in that month. So that becomes a bit tricky in that sense. Therefore, yes, to answer your long question in short, yes, you may choose to do that with a likelihood of a small query which can be answered.
Last question. What will happen if no action is taken in IMS and all the transactions are kept pending, even after the Section 16, subsection 4 timeline? Will all ITC claimed in GSTR-3B become ineligible?
So the process, as we understood, was that transactions will first flow to IMS. Based on acceptance, they will flow to 3B, flow to 2B, and whatever is there in 2B only can be claimed. So if there is nothing in 2B, you have kept everything pending in IMS, you can't claim any credit in your 3B returns at all. So if you claim, you will immediately get a notice in the same month. So therefore, I think this will be more like a academic question, or to some extent, if somebody does it for first couple of months only, the notice will come.
Sunil sir, can we extend the webinar by 5 minutes more because the questions, if it's okay
I
with
have
you,
no
or we can
issues.
take it up offline. Uh,
Yeah. Sure, go ahead, Sharayu.
Next is by Dhanraj. uploading facility may be more suitable to accepted invoices, uh, debit and credit to avail correct ITC. In future, will make available on the portal? In future, will it be available on the portal?
Yes, I would believe so. And maybe towards the end, maybe Aditya may want to share what are the things happening at the ASP GSP end. And I'm sure uh, they would definitely bring in an API, and ASPs, GSPs would also adapt their softwares to take care of this situation. But I think it may make sense for Aditya to share what is happening at the development end of cash flow or Logitex.
Sure, sir. Sure. I will update quickly at the end.
So the next one is if invoice created and the customer rejected it on IMS, then what action can be taken?
So as far as the supplier is concerned, he can, if the transaction is rejected by the customer, he can either amend the transaction or amend it to zero also. If he does not do an amendment, then whatever tax was plotted in the invoice, he will pay. It will be more becoming like a B2C transaction in that sense, unless he amends it.
Next one is by Praveen. If we have made e-invoice and later generated credit note e-invoice for the said invoice, can we remove both the entries before filing GSTR-1 so as to avoid rejection of credit note issue?
Yes, I think I addressed this question, Sharai, a few minutes back. Yes, I would believe that you should do that.
Next one is by Krishnan. In initial days, the government proposed implementing filing of GSTR-2B. So now can we say that IMS will be mandatory in some time and not the sooner?
Yeah, at some point of time, as I said, it may become mandatory. They would want to take it as baby steps. They would need an amendment in the law itself, and therefore there might be some time available for before it becomes mandatory.
Is it applicable in case of import? How can we handle it?
No, import, as I said, import documents will not flow through the IMS mechanism. The bill of entries will go directly to the GSTR-2B in the way it happens.
Will the IMS facility also reflect the IRN number generated by the vendor?
I would believe so.
Okay. IMS implementing is during mid of the year. I think till September 24, 2B data will not be available in IMS. Hence, how do we claim the reclaimable credit ledger, reconciliation and claiming ITC?
So the temporary reversals and the reclaim, there was in the last year there was the portal was opened up to put an opening balance there, and thereafter the system is automatically tracking the temporary reversals and the reclaim as plotted in your GSTR-3B at an aggregate level. If your opening balance was wrong, the government has now permitted a last window to amend the opening balance for some time. So you can do the changes in the opening balance and reconcile it. Right now, do it offline and then find the correct opening balance and put it on the portal right away.
Is there any timeline to accept or reject a transaction?
The timeline would be the 16/4 timelines. So up to the October of the next year, you can keep it pending. Thereafter, you will have to accept it.
If someone rejected the bill, so any line items will be shown to our IMS. Can we track it like vendor GSTRN or bill number?
I would believe because they are giving you an Excel download, through that all those facilities should be available. We still have to really see how it gets, implemented. But I would believe that basic data of vendor level, vendor in GSTN level working or filtering should be available.
Okay, I guess that's it. Some of the questions that we had.
Okay, thank
Is
you.
there any more we can take it later offline. Yes, thank you so much, Sunil sir. It was an
Thank you.
amazing
It's a
session.
pleasure.
Thank
Thank
you for
you.
taking out the time and helping us.
Thank you, sir.
I
Thank you so much, Sunil sir. It's really a wonderful listening to you. Just as you have mentioned, for the benefit of everyone, government has released the APIs for IMS. They have been released on the sandbox environment of IMS. It includes data that can be pulled from IMS in the Logitax platform. Data actioned on can be done on the ASP, and data can be also pushed with the final action back onto the government platform. The production APIs will be going live in the month of November. That's what the clarity that have given by the GSTN. While 1st of October is the date that is announced for portal to go live, APIs in the production will go live for the month of October return, which will be eventually be available in the November month. That's the clarity from the API's standpoint. We'll be happy to release the note on how we are tackling the situation on the platform on Logitax itself to everyone.
Yeah, I think that's helpful. So basically, the industry also gets of comfort that by November, at least we will be able to do it through the ASP's GSP, which is a seamless process, I would believe.
True. Yes.
Yeah.
Okay, sir. Thank you everyone for attending, and we'll continue to have such sessions which are focused on knowledge sharing in future as well. Thank you everyone. See you.
Thank
Thank
you.
you. Thank you. Thank you.
Thank you.